Hi taxpayers, JBlanchard here from the Financial Guys and Detax Me. And it's that time of year, you know the time of year, when you go into your CPA and you get shellacked. Now, when you go into your CPA, what he or she is doing is counting backwards. They're an accountant. They're counting what you did in 24. There's not too much they can do. There are some creative things. Maybe if you missed your IRA or Roth contribution, you can still do that. But there's not a whole lot that can be done. It's after the fact. 2 critical points. If you don't understand your tax return, critical point number 1, understand your tax return. And critical point number 2, if you don't understand your projections going forward, you're going to lose the game again next year, and the year after that, and the year after that. And if you're a high net worth person, if you're a high income earner, and you're building wealth, it just gets worse and worse if you're not proactive. And folks, that's what I do. I help you be proactive. So I take that tax return, and stay tuned, because we have a special offer at the end of this video. I take that tax return and I put it into our proprietary software, and first of all, I'm going to help you understand what's going on in that return. I'm going to tell you things no misalignment of CPAs. I love them. I actually participate in the tax practice here, but I'm going to tell you things about your return you never knew before. Now these are important things, and we start out with the top line things first, the most important, and then we drill down into the other tertiary things, but they all affect what your future tax payments are going to be. And remember, as a high net worth person, as a high income earner, taxes are by far your biggest expense. What are you doing to curtail them? Okay, let's jump in. These are things you should know. You should know the difference between your adjusted gross income and your taxable income. Very important. Also, the difference between your marginal bracket and your average bracket. You should know how much tax you're paying on your Social Security and what other things would affect that tax. On this report, it breaks down the marginal tax brackets. If you don't know where you fall and you spend too much in 25, you could go blowing on through tax brackets and paying more. Here's a really key concept I teach my clients. The last dollar out is always the most expensive, and you have to watch that last dollar year to year. In fact, you as a high net worth person should have projections. You should know what those dollars are going to cost you down the line so you can control them. You should know what the tax on your long-term capital gains and your dividends are. They're right in this report. Could your tax return affect your Medicare premiums? By gosh, it sure could. It could cause you to get shellacked. In this report, we show you where the income levels are and where you are on the Medicare sliding scale. Again, your Social Security, everybody takes it at some point in time, and some people say it's taxed favorably. I like to tell you it's highly taxed, especially if you make big mistakes like working in retirement. Even part-time can throw you over, where a lot of your Social Security gets shellacked. This is a good time when you're doing your tax return to look at tax efficiency on your investments. This report provides you with that. Are we being efficient with dividends, with interest, with capital gains? Is your advisor being proactive with your capital gains and harvesting losses and looking for ways to take gains off the table? And then I love this last part of the report, and this is where I tell you, I really doubt it. I'll bet you a beer your CPA is not going over this with you. But it starts to drill down and tell you I'm not going to go through the whole list, but it's kind of exciting how long this list is. Are you eligible for Coverdale, Lifetime Learning Credit, American Opportunity Credit, Child Tax Credit, Qualified Adoption Credit, Savers Credit, Clean Vehicle Credit? Are you under the net investment income tax number? Should you be making a Roth contribution? Little side note, market's down. Man, if you're going to convert, you might want to look at converting right now, because you're going to convert at a discount. When the market goes back up, you're going to get those gains tax-free. Could you have a student loan interest deduction? And then, of course, reviewing what you're doing in your contributory plans and your IRAs outside those. And it just keeps going. I do an even deeper dive on your federal return and on your state return. Is any of this of value to you? Well, if it is, I've got great news. The cost to you to do this without having investments with me, the value on this is about $800. For this short time only, for the next month, I will do a free analysis with you and do a 30-minute deep drill down on this report with you at absolutely no charge. If this sounds like a great value to you, if you're just sick of getting shellacked, respond down below and we'll make sure one of my staff gets back to you.